My name is Nurul Shazwani binti Zazuki. My metric number 261341. Introductions. This credit report is to determine whether SAB Resources Berhad Company can make a repayment or not for their principal sum of 1 million in 2.5 years and servicing of monthly interest. As we know, SAB Resources Berhad Company making a profit in 2018, which is 40,697. But in 2019, they are making loss, which is 19,833. Besides that, the interest rate of overdraft secure is 5.6% and the base rate is 3.6%. Other than that, when a sum of 1 million is take only 2.5 years to make a repay over than 30 months installment. From this, the company have enough money to make a repayment based on this term. Next proposal detailing terms, conditions and exposures. As we know, SAB Resources Berhad Company is applying working capital of 1 million in the form an overdraft which Bintang Bank. We as a leader might face high risk for extending the facilities for the company. However, facilities our customer additional working capital is our comfort for exposure extending the overdraft facilities to the customer. The interest rate for the overdraft is 5.6% and it is secured by the company freehold property value at 2 million and the company freehold property will be collateral if the company could not pay back the overdraft. Next is background. SAB Resources Berhad Company was incorporated on 10 October 1974. The founding director of this company is Yang Berbahagia Tan Sri Cheng Heng Jem. Then, the register office and the principal of place business of the company is located at level 14, Lion Office Tower, number 1, Jalan Nagasari, 50200 Kuala Lumpur, Wilayah Persekutuan. The principal activities of the company is investment holding.
As for ownership and management, SAB Resources Berhad is a public limited company. The chairman of the company is Yang Berbahagia Tan Sri Cheng Heng Jem. He is the major shareholder and the main director. He also has more than 45 years experience in business operation. The shareholding of this company is diversely by the shareholders. Next, for business operation, SAB Resources is an investment holding company. It also generates income from the business operations such as food and beverages, credit financing, and property development. This company also have a security service. This service company called Seacom Sundaram Berhad that have joint venture with Seacom Co Limited, Japan, and Koperasi Polis Diraja Malaysia Berhad. Seacom provides security service to satisfy the customer. Seacom provides central monitoring service with emergency response, supply installation of CCTV remote monitoring, and security audit. With these security services, SAB Resources has gained more profit and Seacom's revenue shows improvement by 8.7%. As for operating profit, Seacom only gets 10.7 million ringgit lower than previous year. This is due to the improvement in operation and administrative expenses. As For economy, industry and market, ACB Resources involved in manufacturing and also an investment holding business. This company generates income from dividend payment, rent, or interest. This income came from owning shares from other companies. Due to the COVID-19 pandemic, the economy has become unstable. All stock value has dropped and it affected the dividend that the company would get. Even though this investment holding could not generate income, but this business is a very stable business and involves assets such as property as their collateral. As technology has been improved, the customer demand also changed. The business need to do changes in segmenting the market to avoid losing customer to other competitors. And lastly, COVID-19 pandemic has risked the business as the investor could not afford to pay the dividends to this company.
My name is Meling. My metric number is 263688. Right now, I will present about financial analysis of ACB Resources Berhad in 2018 and 2019. Let's begin with the efficiency ratio. As we can see, the average inventory turnover for this company in 2019 is better than 2018. For average collection period, the company takes less time to collect back its account receivable in 2019. Based on these two ratios, we can see that this company might be less risky for the bank because they will be able to pay back their loan due to their high efficiency of selling off their stocks as well as collecting back their payments. Let's move on to the profitability ratio. As we can see, the gross profit margin for this company in 2019 is less than 2018. This indicates that the company didn't do well in managing their cost of sales. But for net profit margin in 2018 is higher than 2019, which means the company is efficient at converting their sales into profits. Based on these two ratios, this company will be less risky for the bank because they will be able to pay back their loan due to their high net profit. Next ratios are return on equity and return on assets. For return on equity, even though the company increased in 2019, but it is still lower than other companies. This company also has low return on assets in 2019. Based on these two ratios, this company might be risky for the bank because they didn't manage their capital effectively and it will be difficult for them to pay back their loan. Let's move on to the last part that I'm going to present, which is liquidity ratios. As we can see, the current ratio and quick ratio for both years is 0.1 to 1, but the ideal ratio for current ratio is 2 to 1 and for quick ratio is 1 to 1. Both ratios below than 1 are considered as not healthy because NEB might be struggle to pay off its debt and this will be very risky for the bank. And that's all for me. Thank you. I'll let my friends to continue.
Hi, my name is Nur Husnina Bersama, nombor metric 259327. I will continue with financial analysis, which is presented by my friend before. For leverage ratio, there is 2 points, which is debt equity ratio and debt asset ratio. For debt equity ratio, ACB Resources Berhad achieved 1.2 both in 2018 and 2019. For debt asset ratio, ACB Resources Berhad generate 5.6 in 2018 and 6.2 in 2019. For debt service ratio, which is interest coverage ratio, 2018 they cover 1.4 and declined to 0.3 in 2019. Next, we will move to the next point, which is risk analysis and mitigation. For ACB Resources Berhad, they face two risks, which is credit risk and liquidity risk. For credit risk, ACB Resources Berhad has high credit risk because of very low interest coverage ratio in 2019, which is 0.3, and it's too low for credit consideration. It shows that the company are unable to service periodic interest. So, the company mitigate this risk by minimize credit risk by dealing exclusively with high credit rating counterparties. Also, credit risks are controlled by the application of credit approval, credit limit, and monitoring procedure. Risk is liquidity risk. Current ratio and quit ratio for SCB Resources Berhad are both 1. A normal ratio, which is 1 to 1, indicates that current assets are equal to current liabilities. It shows that the company are just able to cover its short-term obligation. So, the company mitigate this risk by actively manage its debt maturity profile, operating cash flow, and the ability of funding. It is to ensure that all financing, repayment, and funding needs are met.
My name is Noratika binti Raja, matric number 261313. Financial year 2090 for SCB Resources Berhad shows that the revenue of the group rose by 8% to 75.8 million compared to that recorded in the last financial year, which is largely backed by higher revenue from the group's core contributor, namely its security services business. The group recorded an unrealized foreign exchange loss of 23 million on translation of its debt denomination US dollar as ringgit Malaysia weakened against the former. Besides that, in the previous year, the group had recognized an unrealized foreign exchange gain of 77.4 million and a gain on disposal of quoted investment of 50.8 million. The bank must give the loan for SCB Resources because the ability to repay is high due to the revenue that they have. Conclusion: based on this analysis fact, we find that SCB Resources performing well in all aspects, include business and operations, financial analysis, and also doing well in mitigate their risk. In financial analysis, about all ratio show that the company have a stable financial performance, such as the company has a high profit margin. It is usually means that it also has one or more advantages over its competition. Besides that, the company with high net profit margin have a bigger cushion to protect themselves during hard time and vice versa for the lower net profit margin. In our opinion, the company has their own strategy to expand their business not only in Malaysia but also in the international market. Recommendation: for the recommendation, the bank should give 1 million loan to SCB Resources. It is because, as we can see in their performance, it shows that the company performing well in their financial analysis. Besides that, the company also have a high revenue and market share, which is the method that we can evaluate their marketing plan. Either the plan is success or vice versa.